Today I'm going to be talking with you about what's going on in the mortgage market and how if you're getting a mortgage in 2022, you have to be even more careful with your lender choice than ever. Seriously, than ever. And I've done a lot of buyer beware, watch out for this, watch out for that video. But what I want to talk about right now is what's happening in mortgage land so that you guys understand and you're looking for red flags. Okay, so first let's talk about what's happened. 2019, business as usual. Okay, 2020, explosion in mortgage world. More refinances than I as a lender could ever dream of. 2021, similar. At the same time as this huge refinance boom, we also had a very great purchase market. So as you guys know, if you were trying to get mortgages in 2020 and early 2021, it wouldn't be uncommon, especially with a refinance. You know, I remember the dark days of 2020, as I call them, where it was taking 90 days for my team to do refis. And it wasn't because my team's not fast. It wasn't because they didn't care. It was because the volume was so much. Okay, so what happened in 2020 is that companies started hiring tons of loan originators. Like if you got your license, it was easy money because there was so much business to be had. You know, you didn't have to know what you were doing. You didn't have to be good at what you were doing. You just had to pick up the phone. 2021, very similar. So there's a ton of lenders where for the last 2 years, they have been feasting on a refinance buffet. Okay, and in order to do a refinance, you do not have to be the most talented lender. Okay, and at the same point, you have companies that are call centers that just hired, you know, processing everything, every single company in the mortgage industry, you know, whereas other companies were retracting because of COVID, they were all hiring, right? Okay, so what you had was where the bar, right? The entry bar in order to do business in mortgages was incredibly low because there was such a surplus that basically as a lender, if you answered the phone twice, the client was probably going to go with you because they may have tried another lender where they called 20, 30 times. And that other lender may not have been able to pick up the phone because they were drowning. Seriously, drowning. So the key thing to know now is that the refinances are gone. Okay, so yes, there are still some refinances here and there, but the rates have changed. They're no longer the lowest that they were. You know, a good bulk of the country is already refinanced. So all of those people that were feasting on refinances for the last few years, or they came into the business and have only done refinances, they're all looking at 2022 going, oh my God, what am I going to do? What am I going to do? Right? Because the refis are gone. So there's two options. And look, there are some lenders who were doing a lot of refis for the last 2 years who will do fine in a purchase market. You know, if you know your guidelines, if you take good care of the client, if you do what's right, if you can perform on deadlines, that's going to be the key thing we're going to talk about here, they will be fine. But there's a lot of lenders that don't have any clue about how to do a purchase. And I mean, look, as a consumer, you go, well, it's a 30-year mortgage. Why does it matter if it's a purchase or a refinance? It matters a lot. If you're refinancing your house and the lender screws up the loan, or they calculate your debt to income wrong, or they miss a guideline and they can't do the loan, the worst thing that happens is you don't get a lower rate. If you're buying a house and the lender screws anything up, the worst thing is you lose your earnest money and you don't get the home. Okay, and in some cases, you know, I'll get calls where someone's like, they told me I was fully approved, so I gave notice and I have to move out in a week and I have nowhere to live. And I look at the file and I'm like, oh my gosh, I'm so sorry. Like, this was never going to work, you know? So you guys need to make sure that the lender you're working with actually knows how to qualify you and knows guidelines. I cannot stress this enough. You know, during the refinance boom mentality, there's been so many large corporations where they've just marketed to you guys nonstop. And they're basically call centers. And that loan originator that's sitting in that that chair, look up their NMLS. How long have they been doing this? Ask them some questions. How much do they know? Just because a company can pay for expensive advertising doesn't mean that their loan originators are the best. It just means the company makes so much money that they can spend on advertising like that. Well, where do you make that money? Margins, right? Okay, cool. So covered that. So first of all, the big thing you have is if you're purchasing a house, you need to make sure you're working with a lender that actually does purchases. So they need to be able to qualify you correctly. As you guys know, I do a full underwrite. Like, I don't even mess around. You need to be shopping with a loan commitment because I don't want you losing a nickel. The second thing that's really big, that's different in a purchase versus a refinance market, is timelines. Timelines, yeah. Refinance, if it doesn't close on time, who cares? You already own the house. Right? What's the worst thing that's going to happen? Purchase, you don't close on time, the seller can rescind, they can cancel the offer. Yeah. Or you can end up homeless. Seriously, these are big things, and you need a lender that understands how the purchase market works. Like, the pace that my team moves is so that we can always get you to that finish line on time. Now, will there be times where we're delayed? Absolutely. If we hit an appraiser that drags it out, we are going to be delayed. But the difference is that we're going to do every single thing we can possibly do up front to make sure that your chance at success is the highest. Someone who's never had to deal with deadlines, how are they going to handle that? Right? I have Kim on my team whose entire job is giving real estate agents updates. The reason that we do that is because happy real estate agents make the transaction better for the buyer. And real estate agents, when they know the loan is going on time, they are happy. If there's someone over here who's not used to dealing with a realtor and doesn't want to call them and give them updates or let them know that everything's okay, you're going to have your real estate agent saying, your lender won't call me back, I can't get an update, are you sure you're even getting a loan? You do not want that in your life. That is why we have Kim. Kim is available at all times to update realtors. Now, do we give the seller's agent every single drop of information? God, no. No. Buyer's agent, with your permission, we share certain details, such as the files in underwriting, the files out of underwriting, the files fully approved, the appraisals back, those great emails and calls that they need in order to feel confident. Okay? So that's one big aspect of this, is just making sure that the lender you're working with actually knows how to do a purchase, okay? Now, here's the other big thing I'm seeing that I really dislike. I am seeing people being advertised to and tricked into refinancing when it makes no financial sense for them. Yeah, as you guys know, my calendar's always open. I talk to a lot of people. I've looked at far too many loan estimates this year where I've taken my pencil and broken down the math, and I've gone over the math with the client of what this lender is trying to convince them to do. It makes zero sense. If you're at 2.875 on a VA loan right now, and a lender's trying to charge you 2 points to get to 2.25 and an origination fee, and your loan's $100,000, it doesn't add up. Right? And that's the thing, is we're not seeing lenders do math that benefits the borrower, okay? We're seeing lenders do math that benefits the lender. Yeah. And that's the thing that I think is so interesting, is that as a consumer, you probably don't know what points are. You're going to call someone if you're refinancing and say, hey, I really want this rate. And they're going to say, sure, no problem. And you're going to end up paying a ridiculous amount of fees and stripping your equity in many cases. And what you have to understand is, a lot of the stuff you might hear on the phone now or in emails when you're talking to a lender, you need to understand that there's going to be a lot of people hanging on for survival this year and next year. It is. It's one of those years. 2018 was another year like that. We have these cycles in the real estate market where a lot of people come in because the demand's so great, and then it slows down and there's a culling. And we're in that process right now. But as a consumer, what you have to know is okay, we're in the period where there's a lot of people that were making a lot of money that are not making any money now and just holding on. How much can I trust them to help me make the best decision for me versus paying the mortgage on their house? Yeah, sorry. And look, I know I'm going to get some hate for this one, but and I'm not saying you have to be a mega producer to be trustworthy. I am not saying that at all. I am saying that you need to make sure that the lender you're working with is a lender for the long haul. Okay? If it's a lender that just came in for fast and easy money in 2020 and 2021, you know, are they going to give you the best advice? I don't know. Probably not. I mean, I've heard some stuff on the phone recently where I've just been appalled. Like appalled. Like I actually had another lender brag to me and go, yeah, I just got him to do the 2.5 points. And I was like what I thought in my head was like, what the is wrong with you? You know, I'm not super confrontational in person though. So it was more of a, oh, did you do the math with them? Right? You guys know I love my little, I wish I had one here, Math Matters hats. If you guys want one, always let us know. We love seeing you in them. But yeah, like it is going to be a bloodbath. You know, I've been talking to other people in the industry that do similar production levels. You know, we work with a lot of people and we're all seeing the same things, that this year is going to be a bloodbath. Like the people who are doing what's best for the client, you know, have competitive rates, can perform, will survive. The people who are going to try to be taking, you know, ripping off clients in order to stay in survival, they're going to get flushed out. It's just going to take 2 years and you don't want to be one of those clients that's their last grasp. So I hope this video has been helpful. I don't want to slam people. Like, it's tough because here's the thing. If someone's newer in the business and they're doing a good job for the client, stay in the business, guys. Like, stay in the business. But if you're going to rip people just to maintain your lifestyle because business has slowed down because there's no refis, please leave. Just go to another industry where you can exploit it real quick, but just like, let's not do this. And that's what I've seen so much of recently, and I know it's going to get worse. And I know I'm going to see it more in VA, FHA, USDA. Those are the three where I'm going to see most of the nonsense. Usually jumbo, you can't really play those games, and conventional, it can be more challenging as well. So it's really the Govy loans I'm most worried about, and then conventional. So as always, questions, comments, reach out, let me know. And you can book a time on my calendar. Sometimes I am booked out a little bit. If I'm booked out too far, leave a message. You know, Alyssa on my team will get back with you, or Jen or Sam or myself if I have time. So I am always here to help you guys. I just want you to, you know, make sure you're working with someone that has your best financial interest at heart. Thanks for watching.